What's up, guys? It's Mitchell J, the Scaredy Cat Guide, and I want to do a quick video for you. I'm actually traveling right now. I'm in Charleston, South Carolina, so don't mind my makeshift setup here, but I want to talk about asymmetrical risk and cryptocurrency. Basically, I talk about risk reward a lot, and essentially the ratios I talk about, it's basically asymmetrical risk. And what that is basically when you put yourself in positions to have investments that can make you many times more than you are risking. So 5 times what you're risking, or 4 times what you're risking, or the higher the better. And I always talk about 2 to 1 is the minimum. And you can apply this really to any investments, but obviously we're talking about crypto. So an example of that is, if we're looking at this Bitcoin chart here, you see that we're still in this descending channel. And as you can see now, we got this long-term trend line, and now this is a pretty substantial downtrend line as well. So we're coming into a big triangle pattern on the daily. So coming into that apex that will be somewhere here if Bitcoin doesn't break out, it's like, all right, well, we can use these as price points to figure out what the asymmetrical risk is. And right now, do we see good risk reward? And we don't. Like, for us to break out of this channel, like, you're looking at 10K basically as now upside resistance. Otherwise, we have to break out of this channel. But what's your downside? Your downside goes as far as below 8K. So you're basically risking what? You're backwards. You're risking almost 2,000 to make 400 or 500 points. You want the complete opposite of that. You want to be risking 400 or 500 points to make 2,000 plus points. And that's essentially what I mean by asymmetrical risk. And this is how you should look at any investment. And it's that strategy that you have to start off with. And then we use the charts and we find support and resistance levels to figure out possible destinations on the upside and the downside to come up with our risk reward profiles. And, this is a lot of what I teach in my cryptocurrency course, obviously teaching support and resistance levels so we know targets to create our risk reward profiles and know what the asymmetrical risk is. But that's what pretty much all great money managers do. They check the asymmetrical risk and make sure that is by far in their favor. So that's really it for now. There's not too much going on. Obviously, 10K was a big level with Bitcoin. It didn't hold it. And again, it's looking like we're creating a broader triangle here. So we'll see what happens, as we stay in this descending channel and maintain this uptrend line. I'm assuming we're going to find some, I got a feeling we're going to find some action in this area, and then we're going to find out if we're breaking out higher or if we're going to break down. So it'll be interesting to see how the rest of this week plays out. This is the first, essentially UTC time. So this is a candle for Monday. So it's the beginning of the business week. We'll see what happens, come by Friday. I'm curious to see. I'm actually looking forward to it. But that's all for now, and I will catch you on the next video. I am putting some links in the video show notes for the ebook that I wrote, which is free to download, that teaches the basics of Bitcoin and what the blockchain is and how to use hot wallets and cold wallets and all that. And then also I'll put a link to the Scaredy Cat Guide to investing in cryptocurrency course where, like I said, I teach about support and resistance and reversal patterns and as well as time frame analysis. So I will see you probably tomorrow on the next video. All right, have a good one.